Pension recycling is where the tax-free cash and/or income from a pension is reinvested into a pension scheme in order to obtain further benefits. Legislation exists to ensure the system that provides tax relief on pension contributions is not abused, and this video outlines the recycling rules that apply to tax-free cash. The first point to note is that you will fall foul of the recycling rules if the recycling was deemed to have been pre-planned, meaning that you made a conscious decision to take the tax-free cash with the intention of making a significantly greater contribution to a registered pension scheme. When looking for evidence of pre-planning, HMRC will consider the motivation for taking the tax-free cash and decide whether or not you always intended to make a contribution due to the payment of tax-free cash. Once it has been decided that the recycling was pre-planned, HMRC will consider whether the tax-free cash is more than $7,500, including any tax-free cash taken in the past 12 months, and whether the total of the increases in pension payments in the tax year and the 2 tax years either side is at least 30% of the tax-free cash taken, and whether the pension payments made are significantly larger than might be expected. The general figure to define significantly higher is 30%. If recycling is kept within these limits, tax-free cash can be used to make payments into a pension scheme, even with pre-planning. However, if all of these rules are breached, then HMRC are likely to apply an unauthorized payment charge. There are instances when HMRC accepts that increases in pension contribution do not fall foul of the recycling rules, and these include when a person receives a windfall, such as an inheritance or lottery win, and makes a pension contribution as a result, keeps their contribution rate the same, for example, 10% of profits, but due to an increase in profits, there is a significant increase in the contributions, joins a new employer's scheme and pays the required contribution for the new employer's pension scheme. Where an unauthorized payment charge is made, the penalty is based on the tax-free cash taken, not the amount that's recycled back into pension. The penalties can vary but are substantial. The points covered in this video provide an overview of the recycling rule, and you should remember that this is complex. Beckett Financial Services is an award-winning firm of financial consultants. We have been helping clients make the most of their pensions for more than 30 years. To talk with a consultant, phone 01284 754 500 or email info@beckettinvest.com. Our website is www.beckettinvest.com, and you'll find our social media links there if you would prefer to connect with us in that way.